How's it going today? Today we're going to talk about the big week or the big disappointment. Almost like it. We're going to get into it. Stick around for my biggest disappointment this week. It was a big week. Had some big kind of misses and not a whole lot. It was good for the market. I mean, I finished in the green for the week, but some of the stocks, the big growth stocks, kind of got hammered like they have been. So I thought maybe a turnaround coming up maybe this quarter, but maybe we have to wait till next quarter. But anyway, getting right into it, Google missed on its earnings per share, then it got hit. Basically, like I always say with Google, it runs up and then gets hammered on the report, and that's what happened to Google. It runs up and then just gets hammered like it always does. Nothing new there. Basically, it spent more on the cloud and stuff like that. It didn't have so it's just increased spending, which I think is good. I think cloud is big, so essentially I like the cloud. I like Google getting into the cloud. They actually bought Fitbit, which actually wasn't on the earnings report, but they just bought Fitbit. I think it's going to maybe okay. I don't know about Fitbit 100%. I think it's kind of the wearable kind of market they're trying to get into. They try to do that. I don't know if everybody remembers them glasses they used to have, but maybe they get one of them watches or whatever they are. Anyway, moving on. Shopify is the next one. The stock was up, but then it was kind of flat. Basically, they're spending more on fulfillment. So essentially, I mean, it was a good quarter, but it seems like in the stock market, every single quarter is different. Every single quarter they focus on something different. I mean, you go back a couple quarters, they're thinking on revenue growth. It's all about revenues. Revenues have to be up. This has to be up. And now, for some reason, everybody's focused on earnings. If earnings are bad, then the stock gets hammered. You know what I mean? Just like in Google, it was revenue a couple quarters ago when it sold off. Well, earnings were beat, the revenue missed. So, that's like the old, revenue miss. So they were like, well, you can fake bottom line, but you can't fake top line, so they sell off the stock. You know what I mean? Now, the revenue miss makes it, earnings per share doesn't, and they go, well, increase spending. So, it's just, or it beats, and then earnings per share is slightly not as good as they thought, and then it sells off. So, I feel like it's more of an earnings this season. So essentially that's kind of how it is with this market. It flips back and forth, you know what I mean? Just like with MasterCard, good quarter from them. They beat both top and bottom, and they just kind of sat there. I don't know what the deal is with MasterCard. It just kind of sat there. Should be up. I think maybe it's a buying opportunity. MasterCard is one of my largest holdings is MasterCard, or whatever you want to call it. Nice, up 16% on revenue. I mean, that's a $200 billion company growing at 16%. So, I mean, that's pretty damn good. Anyway, the next one is Zandex. Once again, I mean, the stock was up on the news, up 5% this week. Pretty good quarter. But once again, they were focused on earnings, and earnings came in line, less spending. So the stock was up on that news. It had some good quarters, and the top line growth grew at around 36%. So, it's a pretty good quarter. And the market cap's only around $7 billion. So I think this company could be. I mean, I recommended it way back in April. It kind of took a hit. It was up in the 90s. Now it's way down in the lower 70s. I still like it. So the way, which is kind of weird, they just focus on earnings this quarter. It did pretty well. Next one is Twilio. Once again, they're focused on earnings, and a lot of these, it's just kind of weird. The top line growth is at 79%. Big top line, bigger loss though. They're spending more money, and the way they look, and the outlook was a little slower than expected. I mean, the outlook was at 68% growth rate, and then it's now at 79. It was at 79, now it's at 68. So essentially, they're thinking it's going to slow down. That was Twilio. Apple reported the same day. Apple did great, like it always does. well, as it's been going well, which is kind of weird, because here's, like I said, it switched to earnings. Now it's all focused on earnings. A couple quarters ago was revenue, and revenue was down, but earnings was good. Let's look at Tesla. Revenue was horrible, but earnings beat, so the stock goes up a lot. Same with Apple, actually hit an all-time high. Facebook, once again, Facebook is killing it. I don't know why that stock is not up more. Facebook should be a little bit up more on the news. Now we're getting into the one that got hammered, and as Arista Networks, it was actually, I just recommended it, and now it's down over whatever. But this one is really the shocker for me this week, and I could spend more time on this one than the other ones, because the other ones were kind of, but this one is the big shocker. This one, it's down over 25% on the news. So, this stock has just hit a brick wall, which, it's one of these things where, it was almost like, when a growth stock doesn't grow, the stock is going to get killed. And that's the case with here. Earnings beat, revenue beat, but it was all about the outlook. The outlook was horrible. I wrote it down. They were guiding between 540 million to 560, which actually is a decline. So they're saying they're going to have declining revenue versus last year. And the revenue last year for the same quarter was 565. So essentially that's almost a 10% hit. And the guidance was everybody on Wall Street and all these analysts were thinking to 686. That's a big drop, almost 20% lower than expected. So that's why the stocks getting hammered, and they due to maybe slowing. And now the thing to look at with this is, I would sell it. I'm not selling any. I'm just holding on to it because I believe in 5, 3, 4 years, because I always looked long term. But this stock for some reason just got clobbered, on this thing, which it honestly, I don't believe. Sometimes it's warranted, sometimes it's not. I believe this is a case where it's kind of warranted, because you have to think two things. The revenue, maybe there's a slowing demand, or them customers have left them. And why does anybody leave anybody in business? Well, because they can find a better product or a better service, or their service is no longer needed, which I don't think that there's not, the market is not really tapped out. It's just kind of a growing market. So that means that maybe they're not as good, their products are not as good as competitors. Maybe they can't get the pricing. So if that's the case, I believe earnings, if they don't figure it out and it's just not one little blip, I believe earnings will eventually take a hit too, because they're going to have to spend more and maybe decrease the prices. So that's just how it is with them. So I don't know how long this will last for them, but it's definitely some headwinds they're facing. Maybe I always say when these quarters get hammered, it could probably take a good 1 or 2 quarters later, maybe almost 6-7 months later down the line, to look back at it. Maybe next quarter when they come out with their numbers, if it's better, or maybe they raise guidance and say, well, it's over. It's like Nvidia, which Nvidia had some inventory problem. The stock got freaking slammed over the news. But Arista definitely has some headwinds that they're pretty rough shape for them for looking forward, especially if they get declining revenue for a year or so. That stock's going to get hammered, especially if they're leaving them for, let's say, Crisco. But not Crisco. Yeah, I think that's the name of the company. Basically, they make both their electronics from them. So, so essentially, that is a big headwind. But I believe I wouldn't be adding shares, because I don't really like buying companies when they're facing headwinds per se, unless they get well undervalued, and I don't think Arista Networks is at undervalued levels based on their cash flows. I mean, the stock could drop another 10-20%, still be kind of slightly overvalued based on cash flow and stuff like that. Especially if declining revenue, it's kind of hard to predict where it's going to go. So it's really hard to kind of evaluate one of these companies that's growing like that. If they get a turnaround. But anyway, that's really it for the week. Leave a comment, like, subscribe. I go give out some more new stocks this month. I do updates and everything like that and talk about it, and I have other videos and stuff like that. But anyway, thank you for watching, and hopefully it was a good week for you guys. Thank you. Bye.